So in typical military fashion, I got more to cover than the time allotted. So I'm going to try and cook through this here regarding Battle Monument Group. Just a little history, track record. There are two other USMA 89 grads that are partners and principals, John Oliver, Peter Stark. And what do? What does Battle Monument Group do? We're a private real estate fund acquiring commercial single-tenant properties in the discount dollar segment, very specifically Dollar General. Our goal is to deliver exceptional returns to our investors by acquiring the defensive assets that we've become experts at analyzing and selecting, and to grow our ability to give back to the veteran community, something we're very passionate about, and I'm sure everyone appreciates on this call. Both our current funds provide an 8% preferred return, with 6% of that being paid via quarterly coupons, so 6% current return. And we started in 2014 and have already launched and fully subscribed 2 previous funds. We currently have 44 properties valued at approximately $35 million. Really proud of this next bullet point. We've paid out over $1 million via cash and accrued yield to investors to date. And we recently, at the beginning of this year, launched 2 new funds, which I'm going to talk a little bit more about in a moment. Those are obviously the investment opportunities. So a little bit about the assets, though. You know, what is it that we invest in? Where do we put this money to work? And I use that term defensive assets. What does that mean? You know, as I'm sure you can surmise, very specifically, we're focused on properties that will perform well in any type of economy, be it a booming economy, a flat, muddling along economy, and certainly, you know, the biggest concern is a down economy. And, you know, Lord knows, we've all been through a major shakeup with the COVID crisis. And I'm really pleased to share that our hypothesis has been proven very true. All of our tenants have performed well. All rent has been paid on time, in full, and we've made 0 adjustment to investor yield. So it's really been a good proof of concept for us. So what makes these assets defensive in nature? That's a much longer discussion. We don't have time for it today, and happy to go as deep as anyone wants on these aspects, you know, offline in a follow-up conversation. But a few bullet point highlights. These are established stores. So we're not developers, we're not flippers, we're not speculators. We're buying established stores that have prior lease renewals with established customer base. What does that translate into? That keyword there, stability. Very high immunity level to the internet retail impact, known as the Amazon effect. So Amazon effect does not shut down these rural locations. Limited competitive entry pressure in these rural locations. And Dollar General is kind of king of the hill. So there's a high resilience to competitive entry pressure even when competitors do enter. We're looking for properties that have 5+ years remaining lease term with 15 years of renewal options. And so why are these properties that are so good at a higher yield than the typical market? That's because these properties fly a bit below the radar screen for your big REITs, your huge private funds, and your individual investors, your doctors, your attorneys, your 1031 folks. Again, that's a much more detailed discussion, but a couple highlights why. One is their rural nature of these trade areas, not where REITs and big private funds focus. They want to be in major metro areas. And 2 is the double net nature of these properties that we own. By far, most of them are double net, meaning that there is a maintenance component required of the landlord. And as a fund, we've really mastered that. We have the staff, the infrastructure, and the network in place to manage that efficiently, so we still pass through those high yields to our investors. The bottom line question anyone should be asking is, well, great, thanks for sharing that. Does it work? And the answer is yes. Of the 18 leases that have come up for renewal since we established our funds, 17 have renewed on time or early. So, you know, how did we get here? Well, we like to think with age comes wisdom. Of course, all our kids would vehemently disagree. But, you know, it's slow and steady wins the race. These are not sexy assets. There's no secret sauce here. Where you come when you've made all your money on these other higher risk ventures, then you come to Battle Monument Group so you can put it to work in a nice, high yielding, low risk asset class. And what's the value add of Battle Monument Group, the partnership and our infrastructure? It really is harder to do than it looks in terms of, hey, I'll just run out and do it myself. We kill far more deals than we close on. And that's a result of this very rigorous process for valuation and due diligence. And then the portfolio management aspect, not only the maintenance I mentioned, but all other aspects of property management. We take care of that, so you don't have to. So what are the investment opportunities? There are two funds, Guidon Fund and Yield Fund 2020. Let me emphasize that both of them invest in the exact same type of asset. So just imagine our pipeline of deal flow. Whether a deal goes into the Guidon Fund or the Yield Fund is purely dependent on which fund, where the funds are sitting in terms of capital at a given time. But they invest in the exact same type of asset. So there's no different risk profile. One just has really a lower minimum and the other one has a bit of a higher yield component, which we'll talk about in a second. So Guidon Fund 1 that I have up here, it's a $10 million fund with a $10,000 minimum investment level. Again, that 8% preferred return that I talked about. And we are perfect for IRA 401k. We've got about 130 investors roughly, and many of them have moved their IRA 401k funds in. Because again, we're just built for that long-term investment capital. There's our website there for the Guidon Fund. We have an extensive FAQ section on the website for more information. The Yield Fund, essentially the same as the Guidon Fund, except that it has you see that $1 million minimum investment. We have recently lowered that to $250,000 as a result of the COVID crisis and the uncertainty in the economic markets. That one does offer a target IRR of 11 to 12%. Again, it's comprised of that same 8% preferred return. But there's also, you see that bullet point down there, there's a 50-50 split of capital gains carried to fund wrap up, which is 7 years for both funds, and it's achieved through either recapitalization and or liquidation of assets. And we do also offer customized 1031 solutions. So, with this group, I really don't need to spend a lot of time on this slide. You know that integrity is the foundation of everything we do, and that's just a given with this kind of audience. I won't go through each bullet point, but these are specific examples of us putting our money where our mouth is. So when we say we put investors first, we mean it, and these are specific examples. And the bottom line is that last bullet point. It's the most important bullet point of this entire presentation. It really is the proof that what we're doing is worthy, at least of consideration, I hope. 70% reinvestment rate from our existing investors. And that's not the result of capital calls. In 6 years we've been in existence, we've never done one formal capital call. This is a result of our investors reaching out to us to put in more capital. So next slide is just partner profiles. And then the last slide is contact information. I appreciate your time. We would love to chat further with anyone that has interest. Please do reach out. And thanks, Scott, for having us on here.